Hi everyone, today is Friday, April 23rd, and welcome to Friday Market Insights. My name is Sue Talbot, and I'm a partner and portfolio manager here at Genus. And with me this week is Wayne Wachell. Wayne is our CEO and Chief Investment Officer. So Wayne, let's get right to it. Can you give us a recap on what happened in the markets this week?
Well, the market was flat this week. Most markets were flat. There was some volatility within that. A couple of negative events that happened that put more of a risk-on tone to it, or risk-off, I mean tone to it. First off was the situation in India with the COVID breakout there. It's that rattled the market a little bit. And then later on the week, Joe Biden came out with his plan for marginal tax rate or tax rate on capital gains at 43%, and the market went down 1% off that right off the bat. There's some concern about that. That could, if that comes to fruition, I don't think it will. It could mean maybe 7% off the U.S. market just because of the impact on tax.
Right, and the market's back up today, I think, and markets were at all-time high, so you would expect people to have netted out with gains. And of course, if they could, realize gains at a lower rate, they would obviously try and do that. Mm-hmm. Let's talk about the Bank of Canada came out on Wednesday and said that it was scaling back on quantitative easing or emergency stimulus. And we're the first major economy to do that. They also signaled that interest rates may increase, and they also revised their growth estimates upwards to 6.5% from 4%. So does that mean the economic recovery is happening much quicker than anybody thought?
I think our view is that there was going to be a strong recovery. So I think it's in line with our view. And they have a good track record, by the way, of making these calls. Our forecasting team is very good at this. They tend to be one of the first banks to move in a different direction from the other central banks. And so I think you're going to see more from other central banks in a few months.
Okay, so that was going to be my next question. So regarding the other major economies, you do think the other central banks will follow suit?
Yeah. Central banks always tell you they're not going to raise rates or stop QE until they do. And I think the Bank of Canada is the first one to come to confessional and say, we're going to start tightening things up a bit here.
Okay, so the follow-up question is when interest rates, when they do rise and if they rise, what is our strategy going to be here at Genus?
I think we're positioned pretty well there already. We have low short-term maturity, short duration in the bond market, in our bond portfolios. We're pushing more into cyclicals, which do well when rates rise. And we're also pushing more into value, which will do well in a rising interest rate environment. So I think we're there, but we'll probably push even more in that direction.
Okay, so let's talk about budget. So the Liberals released the first post-pandemic budget, and I think everybody was bracing for more taxes, especially on the capital gains front, and that did not happen, so that's good news. But there was a lot of spending in this budget, and I don't think they left anybody out. So there's going to be provided for students, parents, seniors, small businesses, and this doesn't really align with what the Bank of Canada is saying. So the Bank of Canada is saying is, we're starting this recovery phase, so we're going to take a step back. But the government is saying, look, we're still not out of the woods yet, so we need to provide all this extra aid and stimulus there. So what's happening here?
Well, I think, number one, the government has a political agenda as well. And the Bank of Canada is focused on economic reality. And I think they have a better grip of what's going on. I think both the US and Canada have really erred on the side of spending too much money to try and get through this and manage the risk, if you will. And I think that's what the Bank of Canada is saying. You've spent a lot of money. The economy is going to be strong. The forecast is 6.5 for this year, the same with global. So it's going to have an implication on capital markets, on the bond market. So they have different agendas, and the Bank of Canada, is, I think, tuned into reality.
Okay, so just getting back to the budget and the debt. So all this spending is obviously going to increase the debt, and I think the number is going to reach 1.4 trillion in 5 years. And the debt as a percent to GDP I think it's going to peak this year to over 51%, and then eventually land around 49% 4 years later. So do you think this is going to impact economic growth at all?
No, I think, the spending since COVID the pandemic started, has been massive. We've doubled our debt in basically a year. But the good news is we're starting from a very low base, and we're back to 50% debt to GDP at 50%. The US is at 100-ish. Japan's over 200, Italy's over 200. So we're in a good situation, I would say. Back in the 90s, we were around between 90 and 100% at the peak. So all the work we've done since then has helped us right now at this current situation. So we're actually in a good space right now, I'd say. As long as we don't continue this degree of spending, there shouldn't be any issues. And they seem to be reining it in, at least in their budget forecast.
Okay, so it's good to put that number into perspective, because when people hear, 51%, that sounds quite high, but relatively speaking, we're in a better position than a lot of other countries. So unfortunately, COVID is still in the news. The worst cases are in India and Brazil. In fact, Canada banned flights from India yesterday, and this is obviously having a devastating impact on their economy. So could this cause a country like Brazil or India to default or restructure their debt? And if that were to happen, what would be the wider ramifications to the market?
Well, I don't think it's going to happen. In number one, we've all gone through lockdowns. We've all had issues here in Canada and the US. And if you look at India on a per capita basis, it's 4 times bigger than the US. So I don't think it's going to. We'll see more government spending like we've seen in the US and Canada. Central banks will ease. Their debt to GDP is not that bad. I think it's actually lower than Canada's right now. So they do have the fiscal and power to make this all happen and keep things afloat. And I think they will.
Okay, great. So I think we'll end it here, Wayne. Thanks for your comments and your insights. And thanks to everybody for watching. And if you have any questions, please reach out to your portfolio manager. And if you'd like to learn more about Genus, you can visit us at our website. So thanks again and have a great weekend, everybody. Thanks, Wayne.
Thank you.